Imagine standing at the edge of a vast financial arena where Dogecoin, the beloved memecoin, born as a joke, has just endured a corrective sweep after a powerful July surge. Yet whispers in the market suggest this dip may be the prelude to a dramatic resurgence. After rallying some 27.1% in July, Doge entered August with a gentle retracement of around 1%. A modest pullback that aligns with historical seasonal patterns has often been unkind to Dogecoin, with average declines near 10%, leaving traders to wonder whether this is merely a pause in the uptrend or the start of a deeper correction. On one side of this debate stand the bulls, pointing to the coin's enduring bullish structure marked by higher lows and higher highs. Renowned analyst ChrisPax argues that the current retracement is a healthy consolidation phase within a larger uptrend, a support zone that in the past served as the launchpad for a staggering 70% rally in June 2025, when the RSI on the 4-hour chart dipped below 30, signaling an oversold condition that attracted buyers. The key difference this time is that Dogecoin's RSI may again sink toward that oversold threshold, potentially beneath 30, while the price rests near 20 cents, creating what technical purists call a higher low compared to the 14 cents base in June. This pattern of rising bottoms often leads to rising tops, hinting that if history does indeed repeat, Dogecoin could be poised to vault toward the next psychological zone around 34 cents, representing another 70% leap from current levels. The promise of a bounce is bolstered by several on-chain and market sentiment indicators. Social media chatter on platforms like Twitter and Telegram shows a resurgence of bullish memes and to-the-moon rhetoric, suggesting that retail enthusiasm remains robust. Open interest data from derivatives markets indicates a slight reduction in short positions, implying that speculators are covering bearish bets and potentially paving the way for price discovery. And on-chain transfer volumes have ticked upward, signaling renewed transactional activity rather than quiet hodling dormant tokens. Furthermore, liquidity metrics on major exchanges demonstrate that significant buy walls exist, around 18 cents $0.185, a region that historically has absorbed heavy selling and catalyzed rebounds, offering confidence that downside risk may be capped before any retest of lower supports should Doge orchestrate a clear break above the immediate resistance at $0.225 confirmed. By above-average volume, momentum traders and algorithmic funds could rush in, creating a feedback loop that propels the price toward 30 cents and beyond. With 34 cents emerging as the logical target based on Fibonacci, the retracement levels drawn from the June low to the July high, yet for every arrow pointing upward, an opposing force tugs downward, reminding us that Dogecoin's fortunes have always been tethered not only to charts, but to the whims of broader market psychology and macroeconomic winds. The bears highlight that after a torrid 27% rise, profit-taking pressures are natural, and the minor 1% drop in August could easily blossom into a 5 to 10% decline if sentiment sours, or if Bitcoin and Ethereum, whose movements often serve as bellwethers, enter a corrective phase triggered by hawkish central bank commentary. Disconcerting inflation prints or geopolitical flare-ups. In such a scenario, risk-off sentiment would sweep through the crypto landscape, dragging Doge down through its 18 cents support and potentially toward the next floor at 17 cents or 16 cents, especially if derivative funding rates turn negative and short sellers gain the upper hand. A failure to hold the 18 cents level, once the bastion of buying interest, could exacerbate losses by triggering cascading liquidations in leveraged positions, sending shockwaves across low-liquidity memecoin order books and catching traders off guard. Moreover, memecoin rallies are notoriously fickle and often driven by meme-fueled hype cycles rather than by enduring fundamental improvements, meaning that a sudden shift in social media sentiment, perhaps spurred by negative comments from key influencers or rumors of centralized exchange liquidity constraints, could deflate the rally before it truly takes flight. In addition, skeptics caution that while the RSI's descent into oversold territory can signal exhaustion of selling pressure, it is not a guarantee of a reversal. Markets can remain oversold for extended periods during strong downtrends if Dogecoin's RSI were to plunge below 30 without an accompanying spike in buyer participation, it could mark the beginning of a deeper corrective leg, rather than a swift recovery beyond technicals. The fundamentals of Dogecoin's ecosystem warrant scrutiny, while recent developments, such as the ongoing work on scalable Layer 2 implementations, potential integration with popular payment platforms, community-driven initiatives like Dogecoin core upgrades, provide reasons for optimism. These efforts remain in varying stages of execution and have yet to yield tangible adoption milestones, a delay or setback in any high-profile project, such as a postponed protocol upgrade or negative security event, could sap investor confidence and stall any recovery likewise. Questions linger about the long-term utility of Dogecoin versus more versatile smart contract platforms. It's making broader DeFi or NFT integrations less straightforward compared to coins built with native programmability. In this light, the rally's sustainability might hinge on the community's ability to deliver meaningful enhancements that transcend meme value. Furthermore, macroeconomic conditions cast a long shadow if central banks worldwide maintain or escalate interest rates to combat persistent inflation. Liquidity in the financial system could tighten, prompting risk assets, particularly speculative cryptocurrencies, to suffer liquidity withdrawals. Conversely, a dovish pivot or signs of a soft landing might unleash a torrent of fresh capital into the cryptosphere, artificially inflating memecoin rallies as investors chase yield in unconventional assets. Navigating this interplay of technical, fundamental, and macro dynamics demands disciplined risk management. Traders eyeing the anticipated 70% bounce toward 34 cents should consider scaling into positions gradually, entering a base stake around 20 cents, adding 2 positions as the RSI approaches oversold territory, and placing protective stops just below the 18 cents. Support to limit potential losses. Profit targets might be staggered, with partial exits at 25 cents, 27 cents, and further allocations lightened near 30 cents. Preserving upside exposure in case of a runaway rally, more conservative participants could employ options strategies, buying out of the money calls to participate in potential upside while capping downside to the premium paid. Though this approach requires access to liquid options markets and entails time decay risks, long-term holders, meanwhile, may view the current pullback as an opportunity to accrue additional Doge at favorable prices, particularly if they believe in the coin's community, ethos, and viral potential. Using dollar cost averaging to mitigate the uncertainty of timing, they should remain cognizant, however, that Dogecoin's price is likely to remain sensitive to broader crypto market swings and that significant drawdowns are part and parcel of riding the memecoin roller coaster. A balanced strategy might involve maintaining a diversified meta-crypto portfolio, where Dogecoin represents a slice size to one's risk tolerance large enough to benefit from a potential breakout, but contained to avoid catastrophic losses if the downtrend accelerates. Looking forward, catalysts that could validate the bullish thesis include a confirmed 4-hour RSI recovery above 40, a decisive break above 0.2 to $5 with accompanying volume surge, and signs of renewed community momentum such as high-profile endorsements or integration announcements simultaneously. Market participants should monitor on-chain whale wallets' further accumulation, especially if wallet counts holding over $1 million continue to climb, would signal that major players are positioning for a rebound, lending credence to the recovery narrative. Conversely, should whales begin offloading, or if short-term holder counts decline, it would suggest waning confidence and increase the probability of deeper losses. Sentiment trackers should also be watched closely. A sudden spike in fear-related language or a collapse in social engagement metrics could foreshadow a bear-dominated phase. While renewed bullish chatter often precedes sharp turnarounds in memecoin markets, ultimately, the question of whether Dogecoin is poised to spring back from oversold conditions with the vaunted 70% rebound is neither a foregone conclusion nor an implausible dream. It rests on the synchronized alignment of technical oversold signals, strategic whale accumulation, sturdy support, liquidity, macro liquidity conditions, the meme-powered psychology that has historically driven DOG's most spectacular moves. In the volatile theater of cryptocurrencies, rebounds can be swift and dramatic when conditions coalesce. yet they can be equally vicious when the underpinnings prove fragile as traders and investors. Weigh the scales of opportunity and risk. The prudent path lies in vigilance, adaptability, and respect for the dual nature of memecoins. They can rocket to the moon on the wings of collective belief. But they can just as quickly plunge when that belief falters, whether the current correction is the calm before another Dogecoin hurricane, or the opening act of a deeper retracement will reveal itself in the coming days. As technical indicators, on-chain metrics and market catalysts interact, but one thing remains clear in the grand hedge fund MIT's meme coin spectacle. Those who prepare for both outcomes stand to navigate the storm with the greatest advantage,